All right, let's get real for a second. We need to talk about something that most people underestimate until it hits them like a freight train. The Federal Open Market Committee. Yeah, the FOMC. Every time this meeting comes around, markets tighten up, volatility spikes, and suddenly everyone becomes an economist overnight. But here's the thing. Very few people actually understand what's forming beneath the surface. So let's start with a hook, something you can feel in your chest. When the FOMC moves, the world moves, and if we're not positioned before the announcement, we're already late. And right now, with the next FOMC date approaching, December 17th, 18th, 2025, the tension in the market is unlike anything we've seen since the March 2020 emergency rate cut or the June 2022 inflation panic. We're sitting in a moment where debt levels are at all-time highs, global liquidity is tightening, and risk assets are behaving like they don't believe danger even exists. But danger is here. Pressure is here, and we need to talk about it.
The market is acting like nothing can break, but it can. Let's start with some raw numbers. As of right now, the federal funds rate sits between 4.75% and 5.00%. CPI inflation is hovering around 3.4% year over year. Core PCE, the Fed's favorite metric, is stuck around 2.8%. The U.S. national debt crossed over $36.7 trillion. Treasury interest expense passed $1.07 trillion annually, making it larger than the defense budget. And yet, the NASDAQ is up over 15% year to date. Bitcoin is up 31%. And risk assets are acting like money is free again. But money is not free. Liquidity is not back, and Powell is not turning dovish. Not yet. So the question becomes, why is the market behaving like it knows something we don't? This is where we need to be aggressive realists, confident analysts, storytellers who don't shy away from the truth. Because the truth is simple. Markets are pricing in a rate cut that Powell hasn't promised. Right now, futures markets are showing 58% probability of a 25 BPS rate cut, 22% probability of a 50 BPS rate cut, and yes, a 20% probability of no change. And let me tell you, that 20% is dangerous. That 20% is the crack in the wall. That 20% is the scenario nobody is pricing emotionally, even if they are pricing it statistically. Why this FOMC meeting matters more than any other this year? Let me break this down in a way that's brutally honest. This FOMC meeting isn't just another rate decision. It's not just another Powell Q&A. It's not even just the new dot plot. This meeting is the pivot confirmation or pivot destruction moment. And the reason why? Because liquidity is suffocating the system, but the system is pretending it's fine. Look at what's happening right now. Corporate debt maturing in 2026 to 2027 is over $1.4 trillion. Average credit card APR has hit 22.8%, an all-time high. Mortgage demand is at a 28-year low. The U.S. government needs to refinance over $9.2 trillion in the next 12 months. Oil just bounced from $72 to $83 per barrel in 17 days. Bond volatility, the MOVE index, is still above 100, which historically signals recession-level stress. Powell knows this. The Fed knows this. And guess what? The markets know this, but they're ignoring it. That's why this FOMC meeting is massive, because Powell cannot pretend anymore. Either he gives a roadmap for cuts, or he signals more pain. The Fed's two fears: inflation and something breaking. Let's be real. Inflation is not where the Fed wants it. 2% is the target. We're not there. But Powell isn't just fighting inflation anymore. He's fighting against breaking the financial system itself. Look at the data. Bank reserve levels have dropped to $3.1 trillion. Commercial real estate delinquencies are up 46% YOY. Consumer loan delinquencies are up 14% YOY. New home affordability is at the worst level since 1984. These are not soft numbers. These are pay attention before it collapses numbers. Which brings us to the core of this meeting. Does Powell cut to protect the system or holds to kill inflation? Because he can't do both, and the market can't have both. What happens if Powell cuts? Let's walk through the cut scenario because this is where people get overly optimistic. If Powell cuts 25 basis points, risk assets explode, no question. Tech rallies, crypto rallies, housing tries to breathe. But here's the real truth people don't want to hear. A cut rate is the Fed quietly admitting something is wrong. Historically, the Fed cuts before recessions, not after. Every major cut cycle in the last 50 years signaled financial stress. Markets usually rally before the cut, then fall after reality hits. Look at the data. In 2001, first cut, NASDAQ dropped 38% after. In 2007, first cut, S&P dropped 52% after. In 2019, cuts began, then 2020 hit. Cuts feel good, but cuts tell a darker story. We're losing control. What happens if Powell holds? The no-cut scenario is where things get chaotic. If Powell holds the rate at 4.75% to 5%, dollar pumps, yields spike, stocks correct sharply. Bitcoin and crypto get hit, high beta equities bleed. Why? Because the entire market is priced for liquidity expansion, not contraction. Right now, liquidity models show global liquidity index down 12% YOY. US M2 still down around 3.1% from its peak. The Fed balance sheet basically flat for 9 months. No cut equals no relief. No relief equals volatility. And investors, they hate volatility. But volatility is exactly what this decision can trigger. The story the market is ignoring. Here's the real twist, the part where our confidence as analysts needs to overpower the noise. Everyone is looking at interest rates. Everyone is watching inflation charts. Everyone is debating recession odds. But they're ignoring one thing: liquidity timing. The Fed doesn't just change the rate. The Fed changes the story. And the story guides where trillions of dollars move. If Powell signals cuts coming Q1 2026, markets rally into the new year. We need more time, markets sell off. Inflation isn't cooperating. Risk assets correct. We see financial stress, panic, and rate cut pricing. This is not just a meeting. It's the beginning of the next chapter of the economy. What we should be watching. Let me give you the checklist that analysts use, the serious ones, not the social media ones. When Powell speaks, we watch 7 things. Dot plot revision. Look for how many Fed members predict cuts in 2026. If the median moves down, bullish. If not, bearish. Core PCE forecast. If they revise it downward, cut soon. If they revise it upward, pain continues. Labor market language. Words like softening or weakness or moderation means cuts incoming. Financial stability comments. Powell rarely uses this phrase unless something is breaking. Balance sheet plans. Slowing QT could be the real pivot. Press Q&A tone. Powell's most important signals aren't in the statement. They're in his voice, his stress, his pauses. This is how professionals read the room. This is how we stay ahead. This is how we win. How we should position mentally before the meeting. Let me say this clearly. Fomc week is not the time to gamble. This is the time to stay calm. This is the time to stay strategic. This is the time to understand the story, not chase the noise. Remember, markets don't move on the decision. Markets move on expectations versus reality. If Powell does exactly what the market expects, small move. If he surprises, massive move. So we need to be prepared for both. The ending every investor needs to hear. Let me end this with the mindset of a storyteller, a motivator, and an analyst who cares about the people watching. Every FOMC meeting is a reminder of one thing. We're not here to predict the future. We're here to prepare for it. Because the people who survive in these markets aren't the loudest. They're not the flashiest. They're not the ones screaming price targets. They're the ones who stay calm when everyone else panics. They're the ones who understand data when others chase hype. They're the ones who study the system instead of getting trapped inside it. And that's what we're doing right now. We're learning, we're preparing, we're staying sharp. Because when the FOMC decision drops, the world will react, and we will already be 2 steps ahead. If you want to stay ahead of every major financial event, not guessing but actually understanding, then make sure you subscribe, hit that like button, and turn on notifications, because we're building a team here, a team that doesn't fear the market. We study it, we outsmart it, and we win together.